Hello friends. Welcome to my new channel of Equity King. On this channel I'm going to tell you about the upcoming opportunities in the stock market to make money. Before starting the video I want to inform you that this video is for information purpose only and I'm not responsible for your money. Invest your money only after properly analyzing the stock yourself. Let's start the video. Today we are going to talk about delisting of a stock from stock market. So what does delisting means? Delisting means the shares listed on a stock exchange will no longer be traded in the stock market and the company becomes a private company. It is also known as the reverse book building process since it's a reverse procedure of listing. There are two types of delisting. One, voluntary delisting, where a listed company seeks for delisting of its shares from the stock exchange voluntarily. Two, compulsory delisting, where a listed company is compelled by a stock exchange to delist its shares. Here we are going to understand both the type of delisting one by one. First, voluntary delisting. So why does the company opt for voluntary delisting? 1. Control. The promoter wants complete control of the business. 2. New investors. Their strategic buyout for new investors to be in control and charge of the business. 3. Market value. The market value does not reflect the true and fair picture of an entity anymore. 4. Corporate restricting. Delisting is one of the methods for corporate restructuring. 5. Fundraising. There is an unsatisfied fund raised from the capital market. Following are the step-by-step procedure for voluntary delisting. 1. Board meeting. A meeting of all the board members is held for the approval of delisting of security from the stock exchange. 2. Intimation to the stock exchange. After the board approval, the stock exchange is informed about the delisting approval in the board meeting. 3. Pass the necessary special resolution. Prior approval of all the shareholders must be taken by special resolution passed through postal ballot, disclosing all the material facts of delisting. Resolution is said to be passed if votes for the resolution is 2 times the number of votes cast against it. 4. Application for in-principle approval. The company needs to apply as per the prescribed form for seeking in-principle approval from the stock exchange. 5. In-principle approval. The recognized stock exchange needs to dispose of with an application within 5 days of receipt of an application and shall grant in-principle approval after considering and being satisfied. 6. Specified date. A date within 30 days of public announcement shall be specified on which the names of all the shareholders to whom the offer letter shall be issued. 7. Dispatch letter of offer. Not later than 2 working days from the date of the public announcement the company has to send letter of offer to its public shareholders. 8. Duration of the bidding period. The offer shall be opened within 7 working days of public announcement and shall be remained open for at least 5 working days during which the public shareholders can bid. 9. Public announcement. After the completion of an offer, the final price is the price that is quoted by the majority of shareholders. If that price is agreed upon by the promoters, they make a public announcement announcing the acceptance of the final price. 10. Successful offer. An offer is deemed to be successful if the shareholding of the promoter combined with the shares accepted through bid reaches the higher of the following. A. 90% of the shares issued of that class. B. Aggregate percentage of pre-offer promoter shareholding plus 50% offer size. 11. Final price. If the final price is accepted by the promoter, the additional fund is transferred. Such additional fund is the difference between the price of per share as per the final price and floor price multiplied by a number of shares. 12. The final application to the stock exchange. After completion of payment, the final application is sent to the stock exchange within 1 year from the date of passing SR requesting delisting of shares. Now we will try to understand compulsory delisting process. A company is compulsorily delisted by the stock exchange as a penal measure in case a listed company fails to comply with regulations and provisions of listing agreement. 21A of Securities Contract Regulations Act lays down the following reason for compulsory delisting. 1. If the company has incurred losses for consecutive 3 years and has a negative net worth. 2. Trading is suspended for more than 6 months. 3. Shares are traded not very frequently in the last 3 years. 4. Director or any officer in charge has been convicted for 3 years or more for non-complying with regulations of Securities and Exchange Board of India. Fact. At the end of voluntary delisting, retail investor gets a premium amount for the shares that he/she holds, while in compulsory normally retail investor gets nothing. So these were the 2 type of delisting process. Hope you liked our video. Thanks for watching.